Now let's go right over to the natural gas market because let's see.
Yeah.
6 minutes.
Talking about natural gas.
Okay,
we're coming up.
Where are we? So natural gas right now. This is taking a beating.
Not today, but
no, it's
not yet.
It's at 328. And folks, if you haven't test drove the Nadex platform, great time to do it. Let's go over and let's see. What we will do is that we'll find the natural gas contracts.
We're going into commodities, right?
Yeah.
We're going to take a look at the spreads. We're going to look at our natural gas. Now we're usually looking at the 11 a.m.s first to see where we're trading at. We got the indicative natural gas contract, and we're looking at the February contract here. We'll be sure we're on the same one. Yep. 328, almost 329.
Okay.
You know, and realistically, we have one with 330. You know, the upper and the bottom, and that would make sense because there hasn't been a dramatic move.
Right.
So what's going on here is you have the middle spread, which is 320 to 340.
Okay.
And that would make sense because they set these spreads, you know, around where the index is. So as long as there hasn't been a dramatic move, they'll line up well. You know, because this is the one where it's basically going to be square in the middle. This is one where they're going to put the floor at where it is. This is one they're going to put the ceiling at where it is. So let's just take a peek. So here's the one going from 310 to 330. If we're going to play both sides, would be selling that, right? Because the ceilings would be looking for it to go down to 310. And then in the same respect, would be buying the one with 330 as the floor.
$34 and
$20.
54.
Yeah, 54.
So you need 5 penny move. 5.5 penny move, right? To break even.
Yes.
Yep. So can we put a chart up just for a second?
Sure.
Use that chart. That's cool.
Yes. Right here. Yeah. 5.5 pennies, and what did we move yesterday? Like 60 to 70 pennies.
Oh, seriously, man.
Wow, look at this move before.
Oh, this is interesting.
So that's amusing in that I said, okay, there hasn't been much movement because I haven't watching it, right? I didn't know this happened. I just knew that this is when they, this is the price that they set it at.
This has just happened when we just come on.
Well, it started, yeah. I just mean the move, you know, from 9 o'clock it went down, but the reason why they line up so well is because they set those spreads right here.
Yeah.
Well, we'll make our decision over the break and we'll come back, man.
Stay right there, folks. Tommy and I are coming right back. Welcome back, folks. We get the Dow flat, Nasdaq is up 16, S&Ps are flat, and let's see, did we come up with natural gas numbers yet?
I don't see the news. Maybe, oh, here we go. Inventories fell 49. I'm looking at Bloomberg on the other screen. We'll see if there's a reaction. They fell 49 billion cubic feet. I'm clicking on, just take a quick peek, because it looks like this is the contract right here. We'll explain. Something's going on.
Yeah, because one of our contracts is making good money.
Yeah, so we put on one contract on each side. We'll go through it afterwards. This is kind of the first breaking news I pull up. Natural gas inventories fell 49 billion cubic feet. Let's see if they talk about the median estimate. No, they don't in here.
We might have a top live.
Go for it.
Let's see.
They don't normally do the natural gas top live. The oil they do.
Okay. NQ.
We'll see now.
And
what is nice, and let's talk about it as you.
Okay, they don't have the live on it, yeah. They do not have the live.
No, yeah, I'm just looking if there's, sometimes the median estimate starts to pop up here. 49 billion cubic feet. We're talking about maybe a meltdown in the den. Yep, and there's the chart catching
Okay, so now we should go back to what we did.
Okay.
Because it was pretty wild what happened, folks.
Yeah, so it's the same contracts we were looking at.
Yeah.
Right? So here they are. Here's the positive side, 330 to 350. Here's the negative side. Now this is the one with all the value currently.
You know what to do? Can you just sell that one right now?
Take your profit?
Yeah.
You want to buy it back then?
Yeah.
Okay.
Yeah.
Let me just make sure. You're throwing quick stuff at me here, man.
I know.
You're telling me to sell it when we're buying it. Okay.
Thank you.
You got it. Okay. So here's our two contracts.
Right.
And what was nice was, you know, here's a good example where you have, it looks like two market makers in here. You see the 17s are crossing and the 5s were crossing. And this is just moving really fast is what's going on as this thing is still tanking. But what was nice was we had, see this individual one order here, right? So, I mean, these are, you have access to the market when you trade on Nadex. You can be in there, you can be the bid and the offer. And so what was nice was when we pulled this up, is that another investor, maybe somebody like ourselves, maybe somebody out there listening to the program, went in there and they had a 1-unit contract bid or offer that was basically within the market that gave us a better opportunity to take that and a cheaper opportunity. And so I think the combined value, one was about $14 on one side, the other one was about $21. So you end up getting in about $35 as opposed to the $50, which means you only need 3.5 pennies,
which is huge.
Yeah, and so the whole trade was about $35. And we'll see where you got out, but I give or take, I'd say about 100, 110. 320 is about 100. And realistically, that's going to be right square in the middle of the spread. So I just know right away that it's going to be trading pretty much right at par in terms of, it's a futures contract when it's in the middle of that spread.
Sure.
So you would have gotten out at about 320. We were just doing it so fast, and we can pull it up. I'm not sure what price you got.
With a downdraft like that, I could, it's like I'm just taking the money.
You can't go wrong. As Tom said in the last break, you can't go wrong taking profits, man. When you're putting up $35 for 2 contracts, you get a spike 10 pennies in the span of 30 seconds. Yeah, right? How can you go wrong taking that money? And guess what happens, right? This position to the upside is still active.
I know.
That's a free roll. And you can see that. So that one was the one that we got in at 3.11. Okay. The whole trade was only $11.
Right.
So if that happens to just completely reverse around, and we don't think that's possible.
No.
But guess what? It's going to happen sometimes. You do enough of these trades, we know it's going to happen. Especially on news events like this, it's going to happen.
And especially natural gas.
Especially, oil has some crazy moves up and down too in terms of, but they spike it one way and we'll see what happens.
And we got, oil now I'm at Mr. Basil Chapman, we'd be coming on, but oil's at 11 o'clock.
It is. It is. So, same thing, if we wanted to trade oil, we'll just take a quick peek at it since we're looking at it. So again, commodities. Now they got binaries. They're talking about binaries in the den as well.
Yeah.
Let's see what they're talking about real quick before we jump to oil, because I know our man Jay.
Yeah.
Yeah, so he's still looking, he's talking about, now he's looking at maybe a 324 for noon, so he's looking for maybe a 4-penny bounce. That's probably more realistic than going all the way above 330, right? In terms of that would just be a slight pullback. But he was even looking at, before the news came out, I saw there was, maybe a 332, no, it was only trading at 330, and you could get a binary for $18. You're risking 1 to make 5 almost there, risking 20 to make 100 about, risking 20 to make 80 if it expires at full value of 100. So there's a bunch of options. But jumping back, commodities, spreads, crude oil, and the ones you want to look at first, was probably the 12 o'clock. You definitely don't want to look at the 11 o'clock.
No, 10
that's
to
what
12,
happens. And you got to trade in about 53.80. And look at that, 53.75. So you have a great point if you wanted to do both of them.
Yes.
And you got a $1.50 in each direction, 53.75 to the downside, 52.25, 53.75 to the upside, 55.25. If you wanted to even see what we could do right now, we'll do a quick.
No, that's good. We get some time though before we. This is going to be good. Okay.
Yeah. So you're looking at about $63.
Okay.
So 63 cents. Now here's what we have to consider, right? 63 cents, not that drastic when the moves we've seen in oil.
Right.
But what you have to keep in mind is that you're risking 63, and realistically, the most that you can get is 150.
Oh yeah.
Right? Whereas you were putting up on the natural gas trade, to put things in perspective, let's see if it's still up here. Yeah, you were risking 35 for a maximum $200.
Right.
Maturation.
Right.
So that's a different deal.
And I got over 100.
You did, exactly. You got 3 times on your money.
Right.
Realistically in this trade, and it's because there's more of a likelihood that after the news comes out, that this oil contract could spike either to the high or to the low. Whereas when you're trading natural gas at a 20-cent move, that's not as likely. We saw a huge spike. We did. But when you're trading oil, there is a high likelihood that you might get that $150. Whereas maybe not as often you'll get the $200 when you're trading that natural gas the way we did. But yeah, like you said, you got basically a 200% profit, put up about 33, made about 66, call it.
Yeah.
And you really can't even do that in this trade. The most that you can make putting up 65, you get 150 back, you make about 150%. You make your $90 on your 60. So just stuff always to keep in consideration, because when people first start trading this, you might say, man, 60 cents isn't that bad on oil. I see oil move $3 in a day, right? Well, that's great, but your profit is capped at a $1.50 movement from the current price we're at. So you got to realize all that stuff. Yeah.
And folks, you can come over to the website. You can, that's why we want you to test drive these products, okay? Because when you test drive and you go over them a few times, you're going to understand these different moves and in the numbers and how these boxes are set up.
So jumping around, right? Let's jump to the 2:30s, okay? 8 a.m. till 2:30. Now here's where you can have more movement. Now you can probably pay a little bit more premium. They're not quite as lined up well, but they're pretty close. You have a floor at 53.50. We're at 53.85. You have a ceiling at 53.50. And in this one, you do have $300 of total value. You have $3 to the upside, $3 to the downside. So here's our one to the upside. We'll be buying it. Here's our one to the sell side. So there you're looking 62. At about 70, 70, 60, 68 or 70. Call it 70.
Yeah,
so a little bit more money.
Okay.
But the difference,
look at how much time
the difference here as well, though, is that this is a massive difference. This one has a much more bullish bias because to the bearish side, you have no value until it declines 36 cents.
Right.
So, you know, you would need some serious movement to the downside. Just a little bit different. All those little nuances.
Big time. Stay right there, folks. Tommy and I are coming right back. You have the Dow Industrials right now down 18. Nasdaq is up 11. S&Ps are off $1.50. We're going to be right back.